welcome back to Angles with Angel. If you're new here, my name is Angel. I'm a chartered accountant, a finance professional, and a personal finance educator. On this channel, we talk about money in a very simple way, very practical, very demure, very relatable. We simplify money, investing, and wealth building so that you can make smarter financial decisions. And yes, we are in the middle of an investing series. We've already talked about what investing is not, what investing is. We've talked about asset classes. We've talked about how beginners can actually start investing. And today we're going to be answering a question that many beginners ask after they've opened their investment account on what exactly should I buy. More specifically, we're going to be talking about what ETFs are good for beginners. And so in this video, I'm going to be walking you through what ETFs are, why they are beginner friendly, and some examples of ETFs that beginners often consider. Again, just a quick disclaimer before we continue. Let me say this clearly, this video is not financial advice, it's just purely educational. Always do your own research before investing. And yeah, let's get right into it. What is an ETF? What is an ETF? ETF stands for Exchange Traded Fund. An ETF is basically a basket of investments that trades on the stock exchange like a regular stock. If you do like a backwalk, so exchange traded fund traded exchange, it's a fund, a type of investment fund that is traded on a stock exchange, that is traded in the stock market, right? It's the type of investment fund that tracks the performance of a specific stock market index. So there are different types of ETFs. There are different types of exchange traded funds. You have index ETFs, you have dividend ETFs, you have bond ETFs, you have commodity ETFs. So instead of buying just one company, it's usually advisable for beginners to start investing with ETFs, so that what an ETF allows you to do is to invest in many companies at once. So think of it like this. Still using the fruit example that I used in the last time, instead of buying just one fruit from the market, you buy an entire fruit basket, right? That basket might contain a mix of apples, bananas, oranges, grapes, mangoes, which helps you to spread your risk. So if one fruit spoils, you still have the others, right? If you're buying that fruit basket for me, in case I don't like apples, I can take orange. In case I don't like pineapples, of which I don't like pineapples, I could take carrots. ETFs work the same way. One ETF can contain hundreds or even thousands of companies. This helps with diversification. And again, diversification reduces risk. And who doesn't love a less risky investment? Now, let's talk about why ETFs are good for beginners. I'm going to talk about 3 reasons. One is diversification, which we've talked about. Instead of putting all your money in one company, instead of putting all your eggs in one basket, ETFs are good for beginners because they help spread your investments across different companies. So it reduces the risk that one company performing badly will significantly damage your portfolio. The second is low cost. Most ETFs have very low management fees compared to funds that are actively managed. So this means that more of your money stays invested, more of your money is making more money for you, and you're not spending all your money into management fees and into commission and all of that. The third one is simplicity. So diversification, low cost, and simplicity. ETFs are very simple. They are ready-made. They don't require you to choose assets individually. They don't stress you. They've already done the work for you. With one ETF, you can literally invest in an entire market. Now, let's talk about examples of ETFs. The first one is the S&P 500 ETF. This is one of the most popular ETFs in the world. It tracks the S&P 500, and the S&P 500 represents about 500 of the largest companies in the United States. Now, when you invest in an S&P 500 ETF, what you're basically doing is that you are investing in all those companies listed in the S&P 500 at once, across all the companies listed based on the weighting. So I'm going to give 4 examples of S&P 500 ETFs, but in 2 different categories. So on one hand, you have Vanguard S&P 500 ETF with a ticker symbol VOO. You also have the SPDR S&P 500 ETF with the ticker SPY. SPY or SPY is the largest and most heavily traded ETF in the world. So VOO and SPY are examples of S&P 500 ETF. They are US listed ETF that tracks the S&P 500 index, and it's listed on the NYSE. NYSE is New York Stock Exchange under the tickers SPY and VOO. These two ETFs distribute dividends to the investors. They basically pay out dividends in cash. The ETFs are bought in USD on US exchanges. So if you don't have access to the US exchange, you won't see it on your brokerage platform. The next two examples of the Vanguard S&P 500 ETF are VUSA and VUAG. Now, these two ETFs are listed on the London Stock Exchange. Remember that VOO and SPY are listed on the NYSE. VUSA and VUAG are listed on LSE, London Stock Exchange. These ETFs also track the S&P 500. The difference between these two ETFs are the dividend structure. So one distributes dividends and the other one accumulates dividends. VUSA distributes dividends, meaning that when you invest in this ETF, the dividends are paid to you as cash. But VUAG, on the other hand, accumulates dividends. This means that instead of giving you the dividends as cash, it reinvests the dividends into the fund automatically. The next category or example of ETF is the Global World ETFs. Now, we've talked about the S&P 500 ETFs, where we looked at VOO, we've talked about the SPY, we've talked about VUSA, we've talked about VUAG. Now, we're looking at another example, Global World ETFs. Now, some investors prefer investing in the entire global market. Some people do not just want to concentrate on US. Some people are not stans of US, they'll prefer to invest in the entire global markets rather than just invest in one country, right? And global ETFs allow you to invest in companies all over the world. A popular global index is the FTSE Global All Cap Index. Now, this index includes thousands of companies worldwide. That means your investment spreads across different continents, different countries, United States, Asia, Europe, UK, emerging markets. Basically, this gives a broader diversification. And so many long-term investors actually prefer global ETFs because they capture worldwide economic growth. Good examples under the global or world ETFs are the ticker symbols VWCE. You have the VWRP. You also have the Invesco FTSE All World ETF with the ticker symbol FWRA, which invests in companies across multiple countries for broad diversification. The next one is tech-focused ETFs. And a very good example under this is the Invesco QQQ Trust with the ticker symbol QQQ. This ETF tracks the NASDAQ 100. Now, we understand the S&P to be an index, right? The NASDAQ 100 is also an index that tracks the top 100 non-financial companies that are listed on the NASDAQ Stock Exchange. You're talking about industrial, you're talking about technology, you're talking about retail, telecoms, biotech, healthcare, everything that is not financial company. So banks, insurance firms are not included in this index. If you're tech focused, tech inclined, then this is a good place to start. The next one, which is the last one, is the UK market ETFs. If you live in the UK, you might also want to just get some exposure to the UK stock market. A common index for the UK companies is the FTSE 100. The FTSE 100 index represents the 100 largest companies listed on the London Stock Exchange. You're talking about businesses in the energy sector, banking, pharmaceuticals, consumer goods. By the way, FTSE stands for Financial Times Stock Exchange, but it's commonly referred to as FTSE. A very good example of the UK market ETF is the iShares Core FTSE 100 ETF with the ticker symbol ISF. This again tracks the 100 largest companies in the London Stock Exchange. So now we know what ETFs are. We know why they are beginner friendly. We talked about how It's good for diversification. It's low cost. It's simple. We've looked at examples, the S&P 500 ETF. We've looked at global world ETFs. We've looked at the UK market ETFs. We've also looked at tech-focused ETFs as well. I want to say that one mistake that beginners sometimes make is trying to buy too many investments. But the truth is, you don't need a very complicated portfolio as at this level. If you're just starting out, you want a very simple portfolio. Start with just one or two diversified ETFs. For instance, you can say, I'm doing one global ETF and one S&P 500 ETF, or one global ETF and one tech-focused ETF. Simplicity often works best when you're just starting out. If you're a beginner, ETFs can be a simple and powerful way to start investing. Instead of trying to predict the next winning stock, just start with ETFs. ETFs allow you to invest in the growth of the overall market. It's less risky and it gives you access to global markets. If you found this video helpful, please let me know in the comments. Also tell me, are you currently investing in ETFs or are you just getting started? And if you're enjoying this investing series, make sure you catch up on the previous episodes. Don't forget to like this video, subscribe to this YouTube channel, share this video, and I'll see you in the next class. Bye.